The Elliott Wave theory is a fantastic way of understanding the market cycles and to get ready for the upcoming cycles. Here we have a dollar-yen chart on the 4-hour chart, and there is an interesting ending diagonal. The ending diagonal is that cycle where we have wave 1, wave 2, wave 3, wave 4, and wave 5. The wave 4 moves inside the wave 1. That's a key characteristic of the diagonal, the ending diagonal wave in this case. And when you start having this type of overlapping in at the end of the trend, or at the end of what you believe is the end of the trend, you know that there is something interesting happening. It's more than a profit taking, is distribution from the big participants, or as we call it, the big guy. When the ending diagonal shows up with the price losing momentum, like in this case, as you can see, here we have the ending diagonal, and in the context, we have a MACD. This is just a regular MACD showing divergence. So we have ending diagonal under a background of the price losing momentum. That tells that the demand is weak. And when we have the demand weak, that's a hint to get ready to validate a possible reversal or a possible sell-off. This is the first step when you are finding the end of the trend. The next step, of course, is seeing supply increasing, because when we are in this balance between the supply and demand, of course, whatever is stronger, the price is going to move in the direction. Let's suppose the demand is stronger. Of course, that's going to push price higher. But if supply is stronger than the demand, the price is coming down. It sounds quite simple, but it's quite difficult for most traders to understand how to apply these concepts in the markets. And that's where Elliott Wave comes in, to start seeing the weakening of the trend and to start seeing the elements that show the weak demand and possible strong supply. So when we are seeing these traders, before we talk about the supply, look what happens here at the wave 5. We are under the diagonal wave, losing momentum, and the wave 5 of this diagonal wave barely moves above the wave 3. Having a lot of trouble to continue here, it immediately rejects and shows supply. This is also the concept of the uptrust. The uptrust, when we have the price trying to cross a level and immediately gets rejected. Immediately. We are not seeing several candles breaking and following through. Nope. This is just a tail in this case. So this shows how weak demand is happening at the highs. The next step, traders, in this process is when we have the first leg down and the test, the retrace, wave 1 and wave 2. Wave 1 could be the start of the leg down, or could be just a pause or a profit taking from buyers before and not significant for further price action to the downside. But that's when you can add the volume narrative into this storyline. So we have here the high, and the first red candle comes with a big volume. I know that the volume in the Forex markets, usually I see traders saying, no, you can't use volume in the Forex markets because it's not centralized. Well, let me tell you something. We can use volume, the tick volume, because it shows the number of transactions. As you know, when each tick moves, there is a transaction. We don't know the size of the transaction, of course, but this could be the closest way of having the volume in the Forex market. And it works. It works. It gives us the information that we need. Plus, you are not going to rely purely on volume. This is a combination. As you can see, we're using Elliott Wave, we're using momentum, we are using the volume as a data validation, and at the end, what we are finding is which one is the strongest side and which one is the weakest side in the market. Because the big guy likes to absorb the easy money, you know, the weak money. It's easier to go against the weak participants than the strong participant. So let's go back to the volume example. So then traders, when we have the second wave happening, the second wave, even with its strongest peak on volume, is lower than the strongest peak during the leg down. That's a sign of weakness during this trend. And that's where we can focus on selling. And that's where we can start getting ready for the next leg down, because we are seeing a stronger supply than demand during this process. So it's a successful test, let's say, of this ending diagonal. It's validating the ending diagonal. It's showing that actually is a really good idea to follow the wave 3 that is likely to come up next, because this narrative that we are seeing here is the combination of the elements. Then we have the sell-off, the price stops from trending, and now we are in the next test. This week we are going to work with a course about volume. So we are going to start from scratch, and we are going to go through all the process of reading volume and price. It's not just volume. You need to combine how that volume is having an impact in the price from an institutional point of view, not from the retail technique, but from the institutional liquidity point of view, to read what the big guy is likely to be doing and improve those entries and improve the timing of those setups. Is the exercise, is the course that we are working on this week on Elliott Wave Street. Also, we combine this with real application examples in the real markets, so you can learn how to apply things in real action, in real time. The course is going to be for the members on Elliott Wave Street. So if you want to join us and learn all the specifics, all the details, and don't worry if you are watching this video later, because the course is being recorded. So when you access the membership, you are going to access not only this course, but also the previous courses that we have, many courses over 15 years that we have been building this membership. You can find many courses about the Elliott Wave, about the volume profile, about the momentum, about the Wyckoff. Many information is already ready for you in the website. Traders, that's the exercise about combining Elliott Wave with volume and momentum in order to find the weakest and the strongest side of the liquidity. If you want to join us and if you want to learn more about this approach, you can visit us on elliottwavestreet.com, and under the membership tab, pick your plan. We have the Premier, the Elite, and the Mastermind access. You can subscribe directly here and get immediate access. Or if you like, you can apply for the scholarship, the AvaTrade scholarship. Here all the details. Traders, please have a fantastic trading session. Don't forget to follow the waves. I'll see you soon. Take care. Bye-bye.